I think there's something that strikes a nerve in like people who have been in crypto a while versus people who are newer, and there's like some disconnect that is also hidden in this.
That is a good point.
Not a dividend.
It's a tale of two Kwan.
Now your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Alec.eth is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to Chopping Block. Every couple of weeks, the three of us get together and give the industry insider perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Robert is enjoying his new year like a normal person, but the three of us psychos are here to record a podcast for you guys. Joining us, we have, of course, Tarun, the Giga Brain Grand Poobah of Gauntlet.
Yo.
And I am Haseeb, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see Chopping Blocks at XYZ for more disclosures. So I've been actually off the grid for quite a while. Haven't been as tuned in to what's happening in crypto land. Tarun, you were just saying that same thing true for you. You've been touching grass.
Similar. I'm in a rural place in the middle of nowhere in Australia. So.
Okay, very good. And Robert right now is even farther flung than any of us. He had no internet access, so he was enjoying the new year, bringing the new year in style. But it's been another week of dramas for us to jump into with respect to what's happening in crypto. Although price action has been pretty muted, there hasn't been a lot happening on the macro front. There's always interesting things happening in DAO land. So we wanted to cover a little bit what's going on in Aave, in what's being dubbed the DAO Civil War. So Tarun, I'm assuming that you're probably the closest to this, given that Gauntlet is a service provider to the DAO. But let me
was
kind of
service provider.
Was. Oh, that's right. Was a service provider. So let me set a little bit of backdrop to what's going on within this civil war. So of course, Aave is the largest on-chain lending protocol today. Very, very successful protocol. And they have a token called Aave. Now, there's also a company called Aave Labs, I believe also known as Avara. This is a company that's founded by Stani Kulichov, who's the founder of Aave. He's been on the show. And the DAO and the company own different things. So the Aave DAO controls the smart contracts, the risk parameters, it manages the treasury, and it also faces the service providers who directly work with the DAO. Now, the labs, this company controls the front end. So Aave.com and the domain is owned by the company. The brand, all the brand assets, the IP is owned by them. They manage the GitHub, they manage the socials, and all the kind of actual infrastructure to run the front end, indexing, all that kind of stuff. So up until now, it's been a pretty calm and friendly connection between the DAO and the company, but they recently diverged in their interests. So what happened was at the beginning of December, they added a new integration. So the front end of Aave allows you to do swaps. And previously they had an integration with ParaSwap, which is a DEX aggregator, and they swapped it to CoWSwap. And with CoWSwap, what somebody discovered about a week later is that when CoWSwap generates fees, those fees do not go to the Aave DAO, they go to Aave Labs. And those fees, it's a little bit unclear how much it is, but it's something like, on the order of $10 million a year that would go to Aave Labs. So this was discovered, got socialized, people got really upset. Mark Zeller, who is known as the kind of the protectorate of the overall DAO ecosystem, Mark Zeller called this a stealth privatization. People got really, really upset. And this kind of ties a little bit to what we were talking about last week with Axelar, where Axelar got acquired and it was like, oh, there's all this drama about DevCo versus the foundation. This, I think, is a more clear zero-sum conflict between the DevCo and the foundation. And so some proposals were put forward on the DAO, basically demanding that the DAO receive the assets, like all the IP, from the DevCo. So one of them was called the poison pill proposal, which demanded to seize all Aave-related IP, code, and the brand, and force Aave Labs to become a DAO-owned subsidiary, as well as claw back all revenue that was earned using the Aave brand. Now, Stani, who owns Aave Labs, he defended Aave Labs and said, look, we've been a great steward of the protocol. The protocol has ultimately succeeded and become this dominant player because of the work of Aave Labs. like we should find a way to move forward productively with both because ultimately Aave is going to win if we work forward together. If you guys try to destroy Aave Labs, Aave, the protocol is going to be in a worse position for it. If we were doing poorly, there's more argument to like, hey, Aave Labs get in line, but really like, this obviously has been a productive relationship. So there was a snapshot vote that took place on December 25th on Christmas Day, which was called out for being maybe timed in such a way that it was not going to encourage a lot of voting. And there were some arguments about, was this rushed and did this not follow the normal voting process in terms of, proposals going through the snapshot discussions. So on the December 25th vote, the nays won, the nays being do not absorb the Aave Labs into the Aave DAO, kind of keep the status quo as is. However, 41% of the vote voted to abstain. So voting to abstain is basically you show up in the vote, but you say, I'm not voting. And actually, the people who are on the opposite side, the DAO advocates, asked people to vote abstain in support of saying this proposal has been rushed. We want to do another proposal later when everybody has the time to debate and actually decide what is a good moving forward proposal. So 41% voted to abstain, 55% voted nay, and a very small percent voted yays, which would be actually taking the assets from the DAO. So there's going to be another vote soon. But this has been widely seen as probably the biggest flashpoint within DAO governance about the conflict between a DevCo and a foundation. So I'll stop there. Tarun, you're probably the closest to the Aave DAO and all the machinations that have gone on in that ecosystem. What's your take on this whole DAO civil war?
I'm thankfully not close now. I think that's the beauty of it.
Right. So by way of background, I think Aave Mark Zeller in particular hates Gauntlet and has gotten to very public fights with you guys before.
Yeah.
Over some of your past dealings.
I would say I do think this is sort of why a lot of the newer DeFi protocols have gone different directions. But I guess this was like kind of always an undercurrent for a while, to be honest. Like even back in 2022, 2023, I think like the friction between NBGD, who sort of view themselves as the main stewards of the DAO, and Avara were like sort of latent. They weren't like, you gave this description just now where you're like, everything was great and all of a sudden it was bad. But like any long-standing fight in a complicated relationship where people are friends and enemies and back and forth, it was brewing for a while, I would say. And I think there was kind of this feeling, and you can see it in some of the comments. So like, this is not me saying, I'm not saying any opinions because having been in enough DAO fights, I prefer being on the sidelines and the bleachers. But you can see a lot of people say like, hey, sort of, there was this appearance that like Aave Labs kind of stepped away from Aave, the protocol, for a while, especially when they kind of changed their name. They were running Lens protocol, they were doing all this other stuff, and then kind of came back later to do V4. Whereas like V3 and the stewarding was kind of done by the DAO providers. And so I think this animus goes back a lot longer than just like, hey, we want the IP now. I think the CoWSwap thing is kind of weird to me because it's sort of, I remember when the Paradex integration, so like before basically Aave had the swapping feature, which was using Paradex, which is the small DEX aggregator that realistically was like kind of probably would not exist at all if Aave wasn't routing order flow to them. They're really tiny. So eventually, obviously, the prices just got bad, so they had to pick a new one. And so I don't really know how these front end wars end. I do think an interesting parallel is, of course, the Uniswap one, where they just had the unification vote, and now the DAO and company are sort of the same. But for many years, Uniswap Labs, the company, would constantly get the same type of criticism, right? Like, oh, Uniswap X, like the fees go to the company, not to the protocol, so the LPs are getting rugged. And I think the funny thing is like this entire set of like Uniswap and Aave sort of switching sides on this has made a lot of the anons who love commenting and being kind of assholes on the internet about this stuff very confused because like a lot of them are like, I've hated Uniswap for so many years. They've been robbing the LPs, and like now they're like, and a lot of them are like, Aave is the best run DAO in history, and like I've just observed their Twitter presences become completely confused as to what side they support anymore. And so I think these things are kind of complicated. I don't know what it means for a DAO to own IP off chain fully, to be honest. Like, I don't really understand how you would reconcile
Don't the DAOs
this.
usually own the IP? Like they usually own the trademark and like for the foundations, usually that's what happens, right? Like
The
the
found no
IP and the brand is
foundation,
given to the
yes,
foundation.
foundation, yes, but
Right, but the foundation
this
is
case,
subordinate to the DAO. Isn't that usually how foundation charters are set up?
yeah, but it's like, what jurisdiction are you going to make the IP claim in? Like, do you want to make it in BVI? Do you not want to make
So
it? You know,
Aave
like,
doesn't
there's a
have
lot
a
of weird.
foundation.
Yeah, there's no foundation.
There's no foundation. I see. Oh, I see.
Yeah. So
Okay.
it's remember they're kind of, and I mean this in a good way, right? They're a cockroach, right? Like they ICO'd in 2017. So they kind of have a different story than all of these people who are foundation labs. It's like more structured because like at that, and so like there's a lot of idiosyncrasies that come from that are not so obvious. But I do think there's sort of this weird thing where like no one has really tested a lot of this stuff legally. Like I don't know why I'm blanking on his real name, but his Twitter name Lexnode, the lawyer.
Gabe Shapiro.
Gabe, yeah. Sorry, we had him on the show, so I feel bad.
That's right.
Brain fart. But I think he has some interesting points about the idea of like, no one has really challenged a lot of this stuff, and like it's not totally clear what happens. But like you can make different suppositions, but it's not. I don't know what it means for the IP to be used in an aggressive lawsuit by someone who has valuable IP, because I kind of think a lot of the foundations don't have IP and a brand that's anywhere near as valuable as Aave. So like we haven't tested something as big, in my opinion. I mean, maybe the L1s kind of do, the L1 Foundation, but honestly, I think Aave just like has a better brand than them, and probably more people know about them.
Ethereum
just
IP
from a,
is
like-
owned by the Ethereum Foundation, right? And isn't the Bitcoin?
Yeah,
wasn't that true for Bitcoin at some point?
I don't know about Bitcoin, but I think Maker, if I remember, also had like a trust that owned the IP that then like was like the trustee basically had to obey like the votes of the DAO holders. So it's like sort of another roundabout way to like have the DAO owned IP. But I actually have kind of a different take on this. I think this is actually different from the Uniswap drama, and that the Uniswap drama, I think, was very clearly a sort of bright line of like, where is value going to accrue? Is it going to go into the labs entity or into the foundation and or into the DAO? And I think it stung especially because there was this whole multi-year debate over, when is there going to be a fee switch for uni? When do uni holders get paid? And then it was like, oh, actually, in the interim, the labs team is actually going to eat first, and then maybe at some point uni holders get paid. And it's clearly cannibalistic with LPs and token holders, right? Like charging an incremental fee on top of your existing swap, clearly that hurts, the price and execution and uni competitive. So it's like clearly there's a fixed pie and you're trying to divvy it up, and that's painful. This is like a actually totally different use case and work stream than like core Aave lending. Like I think if Aave Labs were skimming bips from yield that should be going to lenders or borrowers or to the DAO, I would totally empathize. But this is like why does the DAO have a right to what this website is earning from swap fees? Like the DAO is not, like the protocol has nothing to do with swap fees. It's not a DEX.
Well, so the argument is that like the Aave.com brand should be owned by the DAO, and it's by virtue of being the Aave.com brand that they're getting this flow. If they instead were like Avara.com, then I don't think anybody would complain that like, okay, they're making money on swap fees.
I mean, that feels a bit pained, I guess. Like, sure, you could maybe make that argument, but it's not like, oh, these are fees that are not going to the DAO. Like the alternative is they just shut down the fees and then no one gets the fees, or they shut down the feature and then no one gets those fees. So in my mind, it's like a totally different work stream than the actual core protocol. So I mean, I hear you on the IP monetization, but that doesn't even seem like what they're talking about. They're talking about the CoWSwap fees. Like, I don't think
Yeah.
the Aave IP itself is
So I
10
think
mil a
this
year.
is a very good thought experiment. It's a very good thought experiment because I think if it was Avara.com, nobody would complain, right? And I think it's probably even true that if Avara.com were the main way that people went to Aave, I think people would be less inclined to complain. They'd have a much stronger case to stand on, right? It's uniquely because it is Aave.com, and that is where everybody goes. And in most cases, what most people expect from a DAO is that these assets are owned by a foundation that is basically a not-for-profit that's purely subordinate to the DAO and the token holders, right? And Aave has this weird quirk. It was built a long time ago. This is pre-foundation era. You know, the legal structuring that everyone kind of imagines is the way that this is supposed to work. It's just not the way that it works in Aave. In Aave, there is no legal entity, I guess, or maybe there's some small legal entity that's like kind of a backbone for the DAO. But for the most part, the DevCo owns a huge amount of the assets that normally would be owned by a foundation, right? And that creates a subversion of expectations from what most people would expect to be the way this works. Is that maybe the DevCo is licensing this from the DAO, but no, that's not the case. The DAO has no claim over the IP. The DAO does not own the name Aave. Aave Labs owns the name Aave. Aave Labs has all the rights to all the cash flows from the copyright and so on. And if they choose to give some of that money to the Aave DAO, they're doing it out of the goodness of their hearts and in violation potentially of their fiduciary responsibility, right? To if they have their own shareholders. So I can see why this is a weird setup. Now, I think that's a very good point that you made, Tarun, which is that this is not the way that DAOs look today. Almost any modern DAO is structured totally differently than this, where the IP actually is owned by a foundation that is a not-for-profit. And if there is an attempt to build a profitable, like a for-profit company, like I'm going to build a mobile wallet, I'm going to build a whatever, some other thing, like an all-in-one DeFi neobank that has a swap function as well as routes you to Aave and blah blah blah. I think everybody would be like, yeah, cool, great. Try to build a profitable business on top of this protocol, but the protocol itself owns the back end as well as the front door, right? The weird thing about it is the fact that it owns Aave.com and that they're monetizing people's access to Aave.com. And that was the same constraint I had, or the same issue that I had with Uniswap, because so much of the volume into Uniswap was going into the front end. If they just created Uniswap X, I'm actually okay with Uniswap X not going to Unitoken. And I'm also okay with the Uniswap wallet not going to Unitoken. Like if they were making money off the Uniswap wallet, fine. They built a mobile app that's hard. It's not obvious to me why token holders should have a claim on the revenue that's made by a mobile app. But Uniswap.com is unique because it is the front door. And it is what everybody associates with the brand equity of Unitoken and blah, Uniswap, whatever, to the extent that people expected that's what they were buying. That's what they should get. That seems like the right answer to me. And so I think Avara should be free. But look, it's weird because of the fact that everybody knowingly came into this situation, right? That's what makes this situation unique, is that if you've been in Aave DAO for a while, obviously, I don't spend a lot of time looking at Aave politics. If you've been in Aave politics for a while, you know this. You know that Aave Labs owns the IP, they own the code, they have the copyright, they have the domain. So if you bought Aave, you bought it knowing this, right? Hopefully, presumably. And so maybe the best argument here among all of this is not that like, hey, Aave Labs should get punished or Aave DAO should get punished or whatever. The best argument here is that like we need better disclosures. Because at the end of the day, it's okay if you buy a token and the front end is owned by some other company, right? As long as you know that, you can price that in. If you don't know that and your expectations are subverted, that's bad. But information is the solve to that problem. You know what I mean? Because for most DAOs today, this is just not a problem.
Yeah. Was this not disclosed before, or like I guess where is was
no,
the
no,
realization?
I think it was disclosed. I think like people knew this if you were deep in Aave world, but it's not standardized. Where would you go to find this? Like you'd have to go digging to go learn all of this if you're just like learning about Aave. I think having like if you imagine like the Blockworks disclosures regime, right? The Blockworks disclosures very clearly. This is like one of those disclosures, which is who owns the IP, where's it owned, break down the like org chart and what's owned by each entity. That would very easily be like if that gets standardized, everybody who goes to the Blockworks disclosure, they learn this. You know what I mean? And that feels to me like a solve.
Yeah. I don't know. The IP thing feels like a little bit of a red herring. It's like I think actually what it is, they see people making money on chain through something DeFi-ish and they're like, we should be entitled to that. Like I think if they were making money through like Amazon affiliate links on the website, I don't think they give a shit. Or like alternatively, what if they just did like a redirect from Aave.com to Avara.com? You go to Aave, you type in Aave.com in your browser, it goes to Avara, it's all Avara branded. I think it would still be throwing a fit. So I don't know. I think this is, people want this to be isomorphic to the Uniswap situation when I just don't think it is at all. They're not selling Aave merch.
I agree they're different, but I think the sentiments in DAOs are not necessarily like trying to analyze the payment and like the payoff function here as much as they're analyzing like fairness, right? There's this feeling of fairness that seems to be what people care about, which is very different from who's, where the money comes in, how does it get split, right? Like, and I think that's where the stuff is always like messy. And by the way, so when I was talking about how there's like a history of multiple things that have happened, I think the DAO and Aave Labs, Avara, like have had a lot of fights. And again, I have no opinion on which side. I'm not trying. I've already been in enough of these. I don't want to be at all involved. I'm just trying to say facts that are in the forum, and you can go read other people's deliberations on this. But there was Aave launched this RWA, Aave Labs launched. See, this is where it's already hard. You forget to say which entity, right? Aave Labs, Avara, launched this RWA platform called Horizon. And Horizon was sort of like, had a way of connecting to Aave and like had a bit of there was some version of shared liquidity there. And the initial post for Horizon said, hey, we're going to launch another token for Horizon, like a RWA, like kind of like a Plume style RWA L2 token, although it's not an L2, but a token in that way. And we're going to give the Aave DAO some fraction of it. And that caused a huge uproar, right? Because the Aave DAO is like, well, like the only reason you can even build this product is because of us. And like it does. And that one, I'm a lot more sympathetic to the Avara view, because it's like, it's hard to get, you have to deal with regulated entities off chain. You have to do all this other stuff. It's not like purely like there is a lot of excess value that's coming from the company. So I'm not sure the token part, like the token part is that.
But that feels like the right
airdrop.
answer, right? Which is like, okay, yes, there's a huge amount of off-chain component to build something like Horizon. It's not something the DAO can just say, well, clearly you made this, no, I made this, give me the whole thing. There's a negotiation. And part of that negotiation is like people getting upset and governance posts and blah, blah, blah. And it's like, okay, you can't avoid that as part of the negotiation. But like, yeah, there's some splitting of value. Maybe the initial bid wasn't enough, but eventually they find some agreement of like, okay, you built it, you should get most of it, but we get some of it. That feels like the right answer. Like, that's like, how else should it work?
Yeah, I think my point though is like the DAO views a lot of these things antagonistically, and in some cases, I think like the DAO is probably correct. Some cases, Labs is probably correct. I don't know where the end point will be.
I mean, maybe it's not pleasant, but that sounds like the right answer, which is that people get mad, then they find an agreement, and then they're all happy, and then like that, the end.
Is there like an agreement here? That's what so sorry. I like Haseeb have tried to take.
No, my understanding. So again, I might be speaking with very low context, but my understanding is that they are delaying because of this vote that did not pass. The large amount of abstained votes are signaling there's going to be another vote with a more concrete proposal that maybe squares the circle a little bit and is something that Avara/Aave Labs might be willing to agree to. I found this whole thing a little bit odd because I didn't really understand. For the DAO, like demanding these assets, it's like, give us the IP and all this other stuff in exchange for nothing.
Well, I think the alternative is that the DAO said they're going to sue Aave Labs, and so they're opening themselves up to I mean, is that a valid lawsuit?
How is the what is that?
I don't know.
What is that lawsuit?
Like, what? Actually, it's probably not America.
well, actually, do you remember this happened in 2021? There was actually there's an example of this. It's like all the DAOs of the same era all have this like problem of like they were a little too early, so like they didn't get to learn any lessons. But like the Curve DAO tried to sue someone for copying Curve because Curve had a non-permissive license. Do you remember this? Really? Then it turned out to be too complicated. That's like what I don't know what the status of that. Not the lawsuit.
I mean, this is even more absurd. This is even more absurd because it's been so many years that Aave Labs has owned the IP, that they're now going to sue them like 7 years later and claim that actually that IP belongs to a DAO?
Yeah, no.
Anyway.
The only reason I'm bringing this up is a DAO trying to sue was actually logistically very complicated. If you read
Yeah, I
that
don't
forum
doubt
post,
it.
you'll see.
I don't doubt it. Yeah, that's crazy. Okay, well, I don't think that's where this is going to end up, but like it is
I mean, what are your
interesting. Like how,
predictions? What are your predictions? Since it's like the end of the year, what's your prediction for this scenario, this situation? in
look,
the next
I
6
think like
months?
the leverage the DAO has is not obviously legal recourse. I think the DAO probably has no legal recourse because they don't own the IP. So no possible way they could have a real claim there. The answer is that like the recourse is headaches and yelling and fighting and the DAO and like Aave token going down. Like it's
Yeah, I
sort
think
of
that's
like
actually
rage
the answer.
quitting
People
is your
people
actual
vote with their
defense.
wallets.
Yeah, they vote with their wallets. So I think like the fact that people are so animated by this means that they are holding the token hostage basically, and you have to negotiate with us, or we're just going to keep forcing this token to dump.
By the way,
and
one
that
thing I
feels
do remember,
like actually the right answer.
one thing I do remember observing before I went on my little Twitter vipassana, I don't know what you want to call it, is I was comparing a lot of the Chinese language translated, of course, so tweets to the English tweets. And I feel like people in Asia were more angry about this issue than people in the West, which I was a little surprised. They were like these long. I was all these like kind of early Ethereum people who I'd never see tweet. I hadn't seen tweet in years. Suddenly were like tweeting people who I probably followed in 2017 or 2016 or 2015 or something, like a long time ago. And then they kind of tweeted in DeFi summer, didn't tweet, maybe tweeted around FTX, didn't tweet, and then kind of. And a lot of them were writing these long diatribes about how like the DAO should really own the IP and stuff. And I thought that was an interesting. Obviously, it's an unscientific thing, and it was like maybe 5 or 6 sort of OG Chinese community people. But I think there's something that strikes a nerve in like people who have been in crypto a while versus people who are newer, and there's like some disconnect that is also hidden.
That is a good point. This is definitely like an OG's.
No, I think it's like a Confucian society kind of thing. You know, there's parental fealty, and you know, the child should be supporting the foundation.
Maybe. Yeah. I'm not sure, but they're also, if the translations are good, they're also much more eloquent than I think the Western writing. The Western writing is like very aggressive and short and like.
It's because an LLM is translating.
And these are like long.
So it looks really good.
Yeah. But they're actually quite a bit more eloquent. I enjoyed reading the Asian. I wish I had a more scientific version of this, but I would love to know this.
Well, like, yeah, but what's the other side,
thing.
right? Like the other side is like, no, Avara has property rights. We should protect the property rights of Avara, which is kind of Tom's point, which is very not Chinese. Like it's not. It's like not. That's not the vibe in China.
Maybe I'm reading too much into it, but I just had
common prosperity.
These are people who
common
don't
prosperity.
Yeah,
it's just interesting. These are people who don't tweet much, but like have been around for a while. You know, that's sort of why I thought it was interesting.
Well, I'm sure we will check back in with the next saga in this Aave DAO civil war, but you can't do a chopping block episode without covering DAO drama. I feel like that's what we're here for. That's what the people want.
Evergreen.
Yeah, that's right. So speaking of 2021 type problems, for those of you who remember Flow blockchain built by Dapper Labs, this was OOG, like GameFi blockchain, back when that was still a thing that people were excited about. And Flow was hacked for 3.9 million. It was some kind of exploit where they exploited the execution layer of Flow, allowing them to mint Flow tokens. The attacker then took those Flow tokens, took them off chain, bridged them, and then went to sell them, ran off, and made a bunch of money, bridged them to Bitcoin or something. So in response to this, apparently Flow was planning to, they paused the blockchain, as you do, and they decided that they were going to roll back the blockchain to the point before the attack took place. Now, this is a crazy thing to do because the attacker already got away. So like they already have the money, right? Like there's like you're not actually solving the problem if the hacker stole the money and sold it and took it off chain. The second thing is apparently they did not talk to any of the bridges or exchanges about this rollback. And so for the bridges, the interesting thing is that so they were like talking in Discord that they were going to do this, and it created this big kerfuffle on Twitter of people pointing out like, hey, you realize that if you do this, anybody who bridged money into Flow in the time since this attack, their money will get stolen. They will get wiped out, and like basically they're transferring their money to the hacker implicitly for bridging in money to like try to go in and arb these pools that are all mispriced and all this other stuff. So thankfully they decided not to do this after the huge outcry that took place on Twitter. They're doing something a little bit more reasonable if they're going to restart the chain in some kind of read-only mode, and then like gradually remediate some of the individual bugs that led to this attack. But it created all this excitement around this idea that like, hey, this is the craziest proposal for a remediation to a hack that I think we've seen in a long time. Didn't happen, so we're thankfully talking about kind of counterfactuals. But Tarun, you mentioned before the show that you were very intrigued by this story. What was your reaction to the Flow kind of head fake rollback?
So I think an interesting aspect of all of this stuff is the fact that the promise that L2s have made, right? That I get forced inclusion, like the sequencer censors me, I can go to mainnet, resubmit my transaction, get re-entered. There's always this kind of Faustian bargain in this type of forced inclusion thing, in that I'm not really guaranteed that I get the same economic value for my transaction when I reforce it, right? It might get reordered, it might get added later, an Oracle update might have come in before I'm liquidated. There's lots of things that can happen, but we sort of kind of, as in Ethereum, people kind of were like, forced inclusion is good enough, right? That's sort of the, I'm sure there will be people who want to fight about that, but I think that's what rollups claim. On the other hand, in L1s, you're always like, hey, I have forkability, the validators can fork, and it's fine. But you also have the same problem when you have a lot of interconnectedness between blockchains, right? You have bridges where the bridges on one chain expect X units of asset. And on the other chain, after the replay, you might have less or more than X units of asset based on how the replay or fork goes. And I think the interesting thing, and an interesting thing that I observed from Alex at dBridge, which is a intent-based bridge that exists, is that in some sense bridges become custodians during forks because they kind of own this liability of like the mismatch between these chains, and they in some ways go from like kind of low risk to their validators, like it's only the duration of the bridging that the validators hold most of the risk, sometimes they hold some tail risk, to like they're completely holding the risk almost like a custodian, like now they have to like reconcile everything. And so I think the interesting thing is like all of these security models we had in 2016, 2017, which are like forkability and forced inclusion, and to some extent, this is, Haseeb, your post from like 2019 about like the USDC forking kind of rule. All of this stuff goes out the window when you're like much more interconnected. Like when blockchains are interconnected, it suddenly completely changes the security models for these things because you have to make sure that all the other chains you're connected to are able to stay synchronized. And in Flow's case, they're kind of a small chain. They don't have much volume. And so it's like no one wants to take the risk for it in the same way that like, hey, the USDC on Ethereum, everyone is just going to follow the circle fork type of, right? There's like, and so this is almost like the inverse of that, your post from, I think, 2019. And I think there's something kind of curious about that. I wonder if that's almost like an evolutionary thing for chains. Like chains will die because like they can't convince the bridges to hold the custodial risk because they're like not important enough or something. But that's
I mean, it's pretty clear. Like
random thoughts.
Yeah, I mean, this is obviously like actually going through a fork of this kind, especially like a chain pause of this duration, is a pretty extraordinary event. And the fact that Flow paused the chain because of like a $4 million exploit also tells you like, look, this is a like this is a chain that's on its last legs. Unsurprisingly, I mean, I haven't heard anything about Flow other than this attack in a long time. And what the attacker minted was the native token, and I think the token crashed like 50% upon this attack, I guess, because the attacker tried to sell $4 million of it, and it just crashes the price by 50%, which tells you, yeah, this is kind of a dead chain. I think I think what you describe is true, and in a way, it like kind of it sort of speaks to like, this is one of the things that I talked about in my end of year predictions, which is that in 2024, I thought that 2025 was going to see this proliferation of app chains, right? We were going to see more things like Hyperliquid. We've seen things like Lighter and EdgeX that have their own chains, but we haven't actually seen that big of an explosion of new chains. And I suspect that we're actually going to start seeing the reverse, is that this actually becomes less and less frequent because of the fact that there's just so much surface area that you have to deal with, right? Like if you're an application, like, NBA Top Shots used to be the flagship game on Flow. And if you're NBA Top Shots, and like, NBA Top Shots now is like kind of in the toilet, but let's say back when it was working, you don't want to have to deal with this. You don't have to be like, oh, we need to like pause all state transitions for some time and coordinate with bridges and like figure out all this stuff. Like, you don't want to deal with any of that shit. You're just like, look, just put me on Solana, put me on Ethereum, put me on, Mega ETH, whatever. I just want like, good throughput and like high usability and access to customers. And that's all I care about. And I never want to be asked anything about infrastructure ever again. I think that's likely where we're going, especially as we've seen gas fees be very low on the year. We've seen a lot of scalability improvements to almost everything. That should imply that actually on a relative basis, it becomes more attractive to just launch on some other chain as opposed to own your own infra. And the fact that a lot of the premium of being your own chain is going away, right? Like this whole idea that like, oh, there's the L1 premium, the L2 premium. Now that all that stuff feels like it's really faded, then the right answer for most applications is just pick a stable chain that you don't have to worry about. If you built on Flow, my condolences, but it's just like, why do I have to deal with this? I don't want to have to be stuck because my chain got hacked for like 2 million and now they're going to be closed for the week.
I mean, this is more like a theoretical interest question that I've had. And like, I started writing a paper on this a long time ago and then I kind of moved on to other things. Was like, is there a sense in which there's like a carrying capacity for chains, like given some liquidity constraints, given some usage constraints, how much maximum inflation the market tolerates? Can you get something that's a little bit like Coase theorem, where it's like, hey, there's like a size for the theory of the firm, which is like, hey, firms generally are this size based on like how much they get in revenue versus how much they have in costs and how much they can share those costs across employees. There's a question if chains have the same thing. Like, can they, is there like a carrying capacity? And I think in this world where arguably like Solana, Hyperliquid, and to some extent specialized rollups like Lighter have shown that maybe you don't really need this amalgamation of 500 chains, we're actually seeing like the kind of Coase theorem acting on these chains, and we're going to like see the space of chains culled. We haven't ever had like M&A or vulture investing or debt restructuring, but in some sense L1, this is kind of what's happening to like L1s that are not generating enough revenue or usage. Like that's at least like my gut feeling is like that's kind of what this stuff is indicating, is like we're moving to a world where we're going to be culling chains.
Yeah, it's funny because like the theoretical construct of layer ones is that they have de minimis cost to run, right? And that's part of their argument why L1s never die. Is you go back, you look up some like 2016 L1 and it's still there. It's still trading. It's probably still live. There's probably still nodes that are processing transactions on it, although no one's doing anything. There's maybe, there's like some weather bot that's posting weather into, the call data. There's always like something happening with these ghost chains that nobody's using. And the theory of that was always that, well, because there's no cost, right? Like it's just, you've got some box somewhere in AWS that's running a node and, as long as proof of stake, the end. I think it's funny because like this, that used to be true for proof of work as well. Is that like, if you remember like Ravencoin and Feathercoin and all these like proof of work chains that just like existed because they existed, and like it's hard to really understand why, like who's paying money to mine this, like where is the demand coming from? Those are all gone. I feel like those you can make an argument that those actually do
Grin
go to
SPVs. Pour one out for the Grin SPVs. Real ones, no.
You can make an argument that like those actually will go away, right? There is an economic argument why those should go to zero. For proof of stake, where like it's like all just accounting on a ledger and network, just packets going through the internet. There's no reason why you can't just run it for a few bucks a month and like you have a network.
But there is a
The
cost
answer-
to oracles, bridges, etc. Right?
Exactly.
Yeah.
Exactly. Like all the infra of a modern chain with like indexers and block explorers and bridges and like all this other stuff. And like they have to upgrade, and like somebody has to have custodian integrations and something, like all the stuff that actually, like the reason why, and people always complain, like, why do L1s raise so much money? And to be clear, L1s probably raise too much money, but why do they need to raise like at least 20 million? Like that's probably how much it costs to just do all that shit. Everything I just described, all that stuff probably costs at least 20 million. And then on top of that, you got to actually, do marketing and do BD and hire a team and like all this other stuff. But just the fixed costs of all the infra you need is probably on the order of about $20 million. So actually, layer ones have become more expensive over time. And that probably argues, Tarun, for, there's the Go Sell ones that don't have any of these things, right? Like, I don't know how many bridges Flow has or like how many custodian integrations. My guess is like probably nothing.
2. Deep
yeah,
Bridge and Layer
maybe.
0. At least I know at least those 2.
Yeah. So like probably those are the 2, right? But like increasingly, there will just be decommissioning of bridges to these chains that nobody's using, and that's probably the world we're going to within the next, call it 2 to 3 years. I don't think it happens immediately, because if you're Layer 0, it sounds good to say that we have 500 chains that we connect to, and so like there on some level, like there's probably just like, oh, we speak every protocol, it's great, you can bridge to anything, but.
So
I think that's the end
so you're
state.
saying like when the bridges and oracles leave you, it's like you're one of those like mining towns in the West in California that are like abandoned, that like
Exactly. Well, it's like you die 2 deaths. One death is when CoinMarketCap delists you, and the last death is when the last bridge disconnects from you, and then you truly are just floating in the ether.
Yeah, they built the new highway. No one's coming to Flow anymore. I'm like, what kind of psycho person is looking for exploits in Flow? By the way, over a holiday of all times, there's
on
really
Christmas. On Christmas,
Wait, what do you? I think the exploit searching stuff is just like 5 million times easier right now than it was like a year ago. So I think people are literally like, point me to an RPC, send me the repo, and then send Claude or ChatGPT on it. I think you're underestimating how. I feel like
do you really think this was like a AI discovered exploit? Like that feels pretty bad.
No, but I think it was AI translated. Take a known exploit, translate it to that. Yeah, like that stuff is much more valuable, I think, than people are giving it credit for. And for these like lower liquidity networks, I think that those can be much more effective than on like places that are expensive to attack.
Yeah. No, but it is true. Attacking on Christmas is pretty dastardly. That's Grinch level behavior.
But it is a historical thing. I don't know, Tom, if you remember the Oracle Christmas Oracle manipulation in 2019. There was like this. Was it on Maker? There was like this crazy Oracle manipulation, and then you saw all these liquidations on Christmas. This was like before DeFi was very big. I remember there's a group chat that you started where everyone was on Christmas the most active because of this.
I totally don't remember this. I believe you, but 6 years is a lifetime in crypto.
I know.
I mean, didn't Trump drop the bomb on Fordo
referencing
on
things
some
of the
holiday?
last decade.
Yeah. No, it's a thing. It's a thing for statecraft as well as for blockchain craft. Okay, so last story we're going to run through is Coinbase announced this broad set of updates that they called System Update, which is a big event they threw in San Francisco, invited a bunch of people, they had a huge live stream, and they announced that they were becoming the everything exchange. So just to give you a quick run through of everything they announced, first, stocks and tokenization. They're adding stocks and ETFs to the main app, 0 commission trading, 24/5, laying the groundwork for tokenized stocks, which they're also going to be offering through a platform called Coinbase Tokenize, which I guess is going to be a competitor to Securitize, both for tokenizing stocks as well as for white label stablecoins. They're launching prediction markets. You can trade real world events via Kalshi alongside cryptos and stocks. You can trade a minimum of $1. They're adding futures and perps into the main Coinbase app. Solana DEX trading via the Jupiter integration. They've got a new Coinbase business all-in-one offering for payments for SMBs, kind of a Stripe/Bridge competitor as well. Coinbase Advisor, some kind of AI advisor thingy that they're building into the app, as well as a global launch of the base app, which was previously geogated, and some payments, stablecoin related stuff. So they've got whole suite of new announcements. Curious to get your guys' take. Is Coinbase now the everything app? What do you guys think this new set of features is likely to get received?
I mean, I think they're probably receiving a lot of pressure from Robinhood and these other sort of more traditional financial players that are trying to get pretty aggressively into crypto and doing pretty well. And people obviously love to meme the coin hood ratio, which has been kind of, looking pretty painful as of late. I thought the interesting thing was that I think that they announced equities perps, which is I feel like pretty big for I mean, it's obviously offshore, but I think I'm just amazed by how quickly this has become like a mainstream topic. Really, in the past year, you've seen all the perp dexes and now centralized exchanges launching perps on single name US equities, which was not really a thing even 2-3 years ago.
So the perps are only international, yeah?
Correct.
Okay, yeah. And yeah, traders outside the US can get 24/7 capital efficient exposure to US stocks through the Coinbase interface. But surely the stocks and ETFs, that's within the United States.
The tokenized ones, yeah, the spot.
Yeah, the tokenized stocks, yeah. So they've already rolled that out. Does anyone know how the volumes are doing?
Not looked.
I'm assuming not big. Yeah. So what is your prognosis then? What is your prognosis for coin hood ratio going forward?
I think it's going to be tough, honestly. I think just the overall TAM for people who want to trade stocks is much, much larger, and it's much more convenient to then just go into your traditional brokerage and trade crypto. The question I think is actually more, what are the actual compelling features that are crypto native that only Coinbase can do, that then people are then going to stick around and also, yeah, I'll trade some stocks as long as I'm on Coinbase. And I felt like that was actually the interesting thing they were doing around hey, you can do on-chain lending and on-chain borrowing and access DeFi and do all this other kind of cool stuff. I mean, I think even the equities perps is a good example of that, at least for international people. But the other stuff, it's it doesn't really strike me as you're going to get net new users. Maybe some crypto people will stick around and trade stocks, but I just think that's you're starting with a smaller funnel.
Okay, but do you believe the story, right? So Robinhood went from stock trading adjacent to crypto trading, and they've been fairly successful at that. Do you believe the story for Coinbase that they can go at it from the other direction and arrive at the same end state?
I think it's just tough. It's you think of all the people who are on Robinhood want to trade stocks, and then some of them will go off and trade crypto, and that's, I mean, obviously it's big for Robinhood, right? It's 30-40% of their revenue. For Coinbase, you're starting with a smaller funnel, which is everyone who wants to trade crypto on Coinbase, and then maybe a smaller percentage of those also want to then go trade stocks. I just think it's you end up with a smaller outcome because the sort of initial factor is smaller. So maybe they'll be able to. I think if anything, it's maybe they should position it differently and then try to go after it as a more traditional brokerage that then has this interesting crypto component to it. But I don't know why someone who wants to trade stocks is gonna get today and open Coinbase versus maybe people who are already Coinbase users or crypto people will open Coinbase to go trade some stocks as long as they're there.
Yeah, I mean, look, I think Tom's probably largely described the market-driven version of this, which seems reasonable. I think there's a sense in which I'm not sure what this concept of everything app looks like in the long run, because there's one version that you could play out, which is if we had full kind of, imagine the Clarity Act was gave crypto people everything they wanted. The craziest version of this is that your local bank app will let you trade tokenized stocks directly from your bank app. It will be here's your balance, here's some tokenized stocks, right? Revolut style. Imagine everything is in one app. Neobank plus brokerage plus whatever, right?
I don't understand. Why would your bank need to tokenize stocks for you to trade them? Can't you just
No. Your bank offers you to trade. Your bank offers you brokerage services already, but very limited, right? But the point is, in a tokenized stock world, anyone can offer all these products from any front end. It's very different. It feels a lot different than I need to be
Is that true? Why is that true? That doesn't sound true at all.
I mean, that's the way I feel like you see the non-US neobank stuff going, where like they're just offering everything, right? And you see that with Robinhood too, right? They're trying to add all these banking features. Like Robinhood's trying to almost go the other way of like start with the brokerage, add the bank.
Sure.
So yeah, I don't know exactly how to think about the strategy because I don't really know the net new marginal buyer of tokenized stocks. Like I don't know how to classify them. Like, are they people who've never used a kind of free stock app? And the other thing that's interesting to me is it's so much more competitive and the fees are basically zero, which is like very different than a crypto exchange economics, especially for Coinbase. I don't it's like a very different market. And like, I don't know how to think about the marginal tokenized equity buyer. Now, tokenized perp buyer, I think is willing to pay higher fees, right? Like there is extra risk premium that they need to be paying for. But tokenized stocks, I don't know. And like,
well, so okay,
you know,
here's the counterpoint. Here's the counterpoint is that like whoever's trading stocks on Coinbase has got to be the juiciest flow in all of mankind, right? Because like, why who is like, you know what? I trade crypto here, so I'm going to trade stocks here too.
but
That
are
is,
there more people in the world than the set of current Coinbase users who fall
no,
in
but
that
that's the
category?
thing, right? You're ultimately you're cross selling stock trading to a set of users who have negative alpha in trading stocks, right? That is valuable in and of itself. It's just, it's like, if Airbnb starts offering like, okay, I know you're going on vacation, we'll also sell you, a car. You can do car rental through Airbnb, right? Something like that. It's not that like people are going to go to Airbnb for car rentals. It just, basically takes another piece of somebody who has a very high willingness to pay and is right at the point of a transaction, right? So they're like, look, I'm a crypto person. I love crypto. Crypto's going sideways, low volatility. I'm missing on the AI boom. I'll go trade here. This person is very juicy flow. This like you will be able to monetize
Yeah, but this
flow
is
really,
not
really well.
TAM
Yeah,
expansion.
I
This
think
is upselling. This is not TAM expansion.
And
right?
your
That's
analogy,
correct.
Flip that, and it sounds absurd, right? Like you go to your car rental place, and they're like, "Do you also want to like hotel?" Like obviously, fucking not. Like if I'm renting for, and so
They literally do.
Point.
They literally do offer you
They
hotels.
do. They
on the
do
car
all
rental
do
site.
that. They do all do that.
They all do that.
I know they do. I know they do. My point
That's
is
not. So it's not absurd.
That is a much like it is absurd to think that you would do that. Like it sounds much more reasonable to think, yeah, I'm on Airbnb. Sure, I'll go like rent a car versus yeah, I'm on Hertz. I'm going to go book a hotel. And that was my point around Robinhood. It's sort of like, yeah, that's a much bigger, it's more normal set of people.
It's a bigger aperture.
Yes, yeah, exactly. And so that's why I think the upside for like this tokenized stocks products is actually people where a crypto exchange is their first form of financial services. So maybe people who are international or people who are getting paid in stablecoins, and then functionally this exchange is sort of becoming my bank or financial service provider, and then sure I'll go buy some stocks then as well.
Yeah, that's why I think that the neobank to tokenized stocks thing is kind of a more attractive funnel, right? It's like net new user.
I had not considered that. I was imagining more like, okay, the Gen Z user who they're like, look, I don't trust stocks, I don't believe in stock or whatever, but I believe in crypto. Like somebody who's very, very young and they think of crypto as the primary financial gateway for them, that this is the way that they migrate into the world of stocks, and they sort of like keep it all in one app, right? That sounds like what I'm describing of like, okay, you're at checkout and like, okay, why don't you also rent a car? What you're describing, I think, is interesting and sounds more like TAM expansion, which is the set of people who are using stable coins. They want to off ramp. They're going to use Coinbase to off ramp. Keep the money there. Why not just this is now your brokerage account? That is actually interesting, and I think that it tells a story about TAM expansion that maybe is less what I was imagining in terms of like a domestic kind of Gen Z crypto pilled market. I do think that in general, a phenomenon that I increasingly have noticed, and I also think this about prediction markets, is that people mostly like to keep the meal, like the food, separate on their plate. They actually don't like to mix them up together. So it's sort of like, people like to have the app for this and the app for that, and they actually don't really want to mix them together. So it's like, I like having my crypto. It's the same reason why, PayPal and Schwab and all of these financial, like Fidelity, that have huge reach, probably more users than Coinbase. They all added a button to buy crypto, but people don't click the button there. When they want to buy crypto, they're like, oh, I know I go to the crypto. I don't want to like put my crypto in like my bank app. I kind of want to put my crypto in like my separate crypto app. And they don't really care about the fees. They just like to keep all the food separate on their plate. And so crypto goes here, more responsible investments go here. Even if you have the button in one app, I don't want it all in the same app. I think that's like a general phenomenon.
I think this is more of like a product and incentives issue. Like I think Robinhood being the counterexample to that, where it's like Robinhood is, a significant percentage crypto, and they're also a significant percent of the crypto market, or like even looking at ETFs, right? Like, that is people going into their Schwab account and buying crypto. I think the problem is like actually buying crypto inside of like Venmo or Cash or Cash actually does decently well, but PayPal, it's always like, okay, it's slowly being rolled out over many years, and it's kind of crap, and you can't actually buy like a lot of the things that you want, and it's kind of tucked away in some shit menu, and so it's like, I don't know, I think you're right that like, hey, maybe people who are using PayPal aren't the most excited crypto buyers, but I also think it is like there are examples of apps that aren't crypto apps doing a good job of sort of cross-selling to crypto to their users.
I think there's really just one example, which is Robinhood, and maybe to some extent Cash App, but like Robinhood is kind of the exception that proves the rule.
What's funny is I was in Australia somewhere, and I saw a bus where there's an ad, which was an app for investing for children, like ages 5+. And I feel like there's this weird thing where like Robinhood's success has bred this like insane number, especially outside the US, of like investing apps for younger people. And that's why I'm not sure where that. Yeah, it said 5+. It's like it has an ad on a bus. It was crazy.
I cannot imagine like children's TV advertising investments to kids. Like what is 5+?
It was crazy.
That's insane. Yeah, wow.
And so I think there's actually this.
I would have if I had an investing app, I would have full ported into Cartoon Network when I was 6 years old. I don't understand. I have
no clue if that's a good investment or not. Actually,
no, it's not.
Probably not that great.
Obviously, television did not do well over the last 20 years. I'll say that much.
That's true.
Yeah. Anyway,
but yeah, I think there's something sort of weird about that market. So like, I totally get the improve your margins, like upsell everything possible, right? That makes a ton of sense. I just am not sure if any of these things are like net new users like that. It's not so clear to me. There's like a lot of things, and some of them in theory could be new users, but it's like not obvious
the
to me. The
stablecoin depositors, I think, is the strongest version of the story, right? Like come for the tool, which is stablecoin off ramping, stay for the whole portfolio. Like now we have you locked in to your financial portfolio here. I think that's
it is true that
story.
They are competing with everyone now, right? It's like MoonPay, Securitize. Like we go down the list.
Yeah. That's right. Well, good for them though. I feel like that's. I mean, it's it sucks for our bags because these are a lot of the startups that we funded that are doing each of these individual pieces.
I think it's interesting that Robinhood and Coinbase and Robinhood have very different philosophies, right? I feel like minus the Robinhood buying MyAx and like LedgerX, where there's sort of an exception. I feel like they try to operate as like a light company, like asset light. Like they don't build all their own infrastructure from scratch. They'll use partners, providers, etc. Whereas Coinbase is like, we're making everything from scratch. Like we're making our own cloud stablecoin as a service thing. We're making our own, right? And the question to me is, you have these two opposite things. One that's like virtualized, like they use a lot of partners, outsource a lot of the technical stuff, really own the UX, really own the user acquisition. And the other one that's like, we want to own the entire vertical stack, get institutions, whatever. But is there a point in the middle of those two kind of axes? And like, that's sort of what I don't know. And then I kind of feel like all of these Coinbase products are trying to push it toward the middle, but I don't know if any of them do that. That's like what I have no conception of. And maybe I'm simplifying it a lot. I'm sure there's going to be people who are listening who work at either place who will message me and be like, we own a lot of our own stuff, or we also, I'm not trying to, this is a broad strokes generalization.
Yeah.
Right?
I mean,
like,
literally the prediction market is powered by Kalshi. And so, there's like, I'm sure they have other partners.
Yeah. It is a broad stroke generalization, but there's a lot of infrastructure that Coinbase
but I do think you're right. I do think you're right. I think like in Silicon Valley, there's often a characterization of big tech companies of like who, like which segment is dominant, right? So like famously at Facebook, like product people were dominant at Facebook. At Airbnb, design people were dominant. And at Google, engineers are dominant. And each, like, you know, everybody has designers, everybody has product managers, everybody has engineers, but somebody always has more power within each team, within the orgs and the decision making. And I think what you're pointing to is like a little bit of something like that, where I suspect that Robinhood is probably more product driven and Coinbase is probably more engineering driven and like more tech driven. And that manifests into a lot of decisions that flow downstream of that, because like Brian was an engineer, and like that you know kind of flows downstream of like same thing, you know, with Brian Chesky was a designer, and so Airbnb is very design driven. And I don't know about Facebook, but you know that's always been, obviously the Google guys are very brainiac engineers.
Yeah, I mean, that's why I sort of wonder if like the next thing is, especially if it's like AI powered investing type of stuff where you're not really thinking, is like going to be a different modality than either of these two. Of like, it might be the design one, like in reality, there might just be like that's what I mean. There's like, it feels like there's something all of these people are getting at, but it's like slightly outside of the directions they're taking. Or at least that's my gut feeling. I don't have any like concrete thoughts other than that.
Okay. Well, we're up on time, so we got to wrap. But we'll be back next week with our proper end of year review, as well as the best of for 2025. Until then, we will see you all next week. Thanks, everybody.